the first ever Wall Street Stonks podcast.
No way. This is the
Yes,
first. Wow,
sir.
that's such an honor. That's
Yeah,
very exciting.
yeah. I'm super excited. I had this idea like pretty much for years now where I wanted to create a podcast. I wanted to create something. I wanted to be able to talk to cool people. And I eventually developed this platform, Wall Street Stonks, on TikTok, and it started to grow and grow and grow, and it got to the point where I can now host a podcast and get some cool people onto the show and talk to some cool people and learn more about whatever I want to learn more about.
Yeah, that's so exciting. And that's actually my primary reason. Now, it wasn't what I went into creating content with, but having these conversations and meeting people is really been the most exciting piece of TikTok so far.
Yeah, no, I
Yeah.
love it. So if you want to start it off, just tell us a little bit about yourself and you can go from there.
Yeah, definitely. So I'm Leon. I live in New York City, and my family immigrated here from Germany. I studied economics at the University of Chicago. I graduated there in 2019. Started my career in private equity. Worked at a financial technology and software focused leveraged buyout fund, and left that about 5 months ago to co-found a real estate tech startup. And so jumped into code. Have been teaching myself programming for about a year and a half. Pretty drastic career change, but definitely still looking to involve myself in financial services as it pertains to programming. So that's my background, and started GenInvest, which is my TikTok platform, about halfway through my private equity role. Really similarly for the reasons that you had, found that, I mean, TikTok's an incredible place to give people a platform quite quickly, but that's a double-edged sword because you can receive a lot of misinformation there as well. So scrolling through what was Stock Talk and seeing a lot of the lofty upside stories presented is it's just something that I wanted to jump into and provide a bit more grounding in financial literacy.
Yeah, definitely, man. I remember probably a couple months ago now, my wife told me, "Hey, you should really check out TikTok." And I'm like, oh, I guess it's just another social media platform, and I was super hesitant, and I'm like, all right, whatever. So she would always show me these funny TikToks, and then I eventually downloaded it, and I'm scrolling through it, and then it just quickly learned what I like, and then it just started showing me
Right.
all these stock talk videos, and it's like, you should invest all your money into this, you should do
Yeah.
this, you should do that. And I'm like, man, this is horrible. I'm like,
Yeah.
stock talk is so toxic. That's actually my first video I made on YouTube. I don't know if you've seen it,
Right.
but
Yep.
it's just so gnarly. I'm like, I need to hop on this.
Yep.
I need to clean up stock talk. And as I started putting out videos, I started doing like fun fact videos and just started growing my channel over time. I started to pivot towards more stock market education and financial literacy and things that I've learned in my journey of investing and stuff. And as I was growing that, I started to discover more and more TikTok pages that are actually not toxic. And again, it goes back to this idea of this podcast where I want to collect those people. I want to get all of the genuine people. I want to get the smartest and the best together and give them a platform to start talking about the things that they're passionate about. And I'm not going to lie, I was kind of intimidated when I saw your TikTok. I'm like, this guy's really smart. And it goes
Thank you.
back to
Yeah.
it goes back to my personal experience with the stock market. I never got into the extremely technical economics of it all. And I feel like that's where you excel. And just scrolling through your TikTok, I've seen your PE analysis, and I'm like, yeah, this guy knows what he's talking about. He's smart. I'm intimidated. He knows more than I do. But that's the point of this podcast where I can learn from you. So pretend like I'm a brand new investor. Where can I get started?
Yep. Yeah, and I think, I mean, this whole line of thinking is really perfect because this is what I mean, the way I present content in financial literacy is I really believe what has been constructed is that in the financial markets is just a set of vocabulary and basic arithmetic. Outside of the quant trading, you may see at funds that are specializing in certain things. But what we do day to day in investment banking and private equity and traditional financial services is really accessible to anybody. It's not particularly complex. It really has a basis in financial accounting, which is where I say anybody who wants to develop a really thorough understanding of financial markets should start, because that's simply the language of how we deal with exchange. But beyond that, getting an understanding for multiples and that businesses trade on their operating metrics like revenue and EBITDA, these are really the core concepts to understand. And that's really probably the number one thing that I would want people to take away from my TikTok videos, is that sure, companies can see a ton of growth, and we can say, oh, Airbnb is a fantastic investment because I think it's going to be the number one hosting model for travel out there in the world. But you need to remember that even if you anticipate Airbnb growing revenues by $20 billion a year for the next 5 years, that needs to be grounded in something. And that it's often the case that a company's stock price is already reflecting anticipated growth. And that's kind of the number one thing I would want to have amateur investors understand, is that we ground price and market cap in operating metrics like revenue and EBITDA. But in terms of where to get started, I generally, the path that I always like to bring for people is start with financial accounting, then get into the corp fin stuff. How do businesses raise capital? What is equity versus debt financing? And then once you've conquered that, how do you think about building valuation models through either an intrinsic method, discounted cash flows, or relative and trading comparables? But really, I think as opposed to, and I've met a lot of people throughout my journey now that, for example, want to switch from computer science and software engineering to go into private equity. And I think that those skills are truly so much harder to learn than the grounding of financial accounting and how to be financially literate.
Yeah, I totally agree. And how do you make, because to some people, what you just said might sound extremely boring or
Yep.
extremely technical or extremely intimidating. How do you make that more inviting?
Yep. So I think what excites me and what always excited me in studying economics and getting interested in the markets is that the markets are really just a debate between you and the rest of the world. And I think that is very intellectually inspiring. No matter how technical you'd like to bring your analysis, it is you taking a position and attempting to justify that in a way that creates you value. And that's what I find just really exciting about playing in financial markets, whether you're a value investor looking for 5-year holds, or you think that you're able to arbitrage on short-term gains and correlations that you find in the market. So both of those scenarios are really exciting for that purpose. I think when it comes down to investing in companies, I think finding companies that you like and understanding why you like them is always a very natural first step. So understanding business models, why are some business models stronger than others? Why I as a consumer particularly drawn to certain products, and should that tell me certain things about the business? Those are certainly all ways to kind of jump into investing as someone who's completely amateur. But yeah, I mean, I think there are certainly a lot about the markets is very intimidating, and I think in many ways it's constructed to be that way. But the principles underlying a lot of these buzzwords are actually quite simple. And that's kind of the most important thing to realize, I think, is self-confidence, that in applying yourself to understanding and learning these terms will really make the journey quite easy. And it's kind of, I'd say in some ways almost meant to be built in that way, to make people feel as if they can't understand. But really, there are so many people in the financial markets who, you don't need a specialized degree to understand finance. You certainly don't need to study finance. I didn't study finance, and I think things are really a lot more accessible than they're painted for us to be.
Yeah, definitely. No, I agree with that completely, because I personally studied strategic and corporate communication. So that's like marketing, advertising, business, psychology, sociology, all put into one degree. And my primary focus was marketing. And that's the path that I went down. And I really got a lot of experience in the marketing industry, learning about a lot of different industries, because I wasn't stuck to a niche. I worked at a video production company, and we would make commercials for, it could be a car company one day, it could be a security camera company the next day. So I wasn't ever stuck into a niche. And that allowed me to just fully understand how companies work and the inner workings of why they want to sell what they sell, how they sell what they sell. And that allowed me to then pivot and take a look at the stock market. And I would look at the stock market and say like, oh, this company is selling this product like this. I think that they're going to continue to do what they're doing, but better in 5, 10, 15, 20 years. And that was my basis of investing in companies. I say this all the time. If you've watched any of my other videos, you hear this a million times, but it's investing in companies that you know, love, understand, use, and see used around you all the time. And I personally don't go and look at their 10 Qs. I don't look at all of the data. I don't look at all of the numbers. I keep it way too simple in my opinion. And that goes back to my intimidation for when I was looking at your TikTok and your YouTube, and I'm like, this guy knows all of the numbers. This guy knows all of the details. He knows where to look on a 10Q and all these things. And my thing is probably like 10 steps behind yours, where it's like, hey, if you want to get started investing, just look around you.
Yep.
Now, if that's the first step for most people, for example, if they like Amazon, I've seen you use Amazon as an example all the time. You say, okay, let's take a look at Amazon's X, Y, and Z. So I've been an Amazon Prime member for over 10 years. In my philosophy, I should have also been invested in Amazon for over 10 years. So when it goes to your philosophy where you look at the numbers, at what point would you have wanted to invest in Amazon?
Right. Yeah. So one, to start, I think it's a great sentiment, and I'm sure you've heard about these guys, and I think you've had it back and forth with comments with Austin Hankwitz, who's really a terrific guy. He introduced me to this company, Griffin, which is effectively exactly this, right? Like, let's automate the process of investing in companies that you're using day to day as a consumer. And so if you have a Netflix subscription, let's invest a couple bucks in Netflix every month. And I think in many ways, that's exactly right. The only counter argument I would have to that is, am I necessarily, one, a representative consumer for that business? And does that make it a strong investment just because I'm using their product? And two, I strictly, and this is just by the way of how I was educated early as an investor, fall into a value investing philosophy, which is that if I build a valuation model for something, and that valuation model implies that the current price of the stock is overvalued over what it should be, I won't invest in it. And that's simply the way that I go through and navigate the markets. I don't necessarily, and if you were to adhere to that strategy over the last year and a half, it definitely would have not performed nearly as well as the strategy that you're pushing here. And I think it has a ton of merit. And I think your point here on marketing is super interesting, because I started a business about 5 months ago and was head down coding it with 3 other software engineers. And we ran into the classic problem of, we spent so much time designing a product, making a product that really we think makes sense and we have a lot of faith in. And then when it came, but like you don't just make a product and people flock to it. You make a product and then design a really killer marketing strategy. And we knew nothing about that, absolutely nothing. And it spent a lot of, and I think that's like having a background in which you understand marketing and understand the ways in which you can make products really fit the market and get consumers on board is such a valuable strategy. And the people who really understand that, I think, and on their own merits, have a truly a strong investing philosophy themselves, right? Because that's not something I was ever very keen on understanding. And I think as a result, there are certainly many investment opportunities that I've missed out on because I can't actually make my own decisions based on the way that I interpret people to be marketing.
Yeah, definitely.
Yeah.
What made you so fundamental? And what made you so stuck to numbers?
Yep. So UChicago is a very theoretical place. Anything about the UChicago experience is grounded in theory. Everything from Black-Scholes for options pricing to Sharpe ratio came out of UChicago, and that is the way that they ground their curriculum. And when I came to UChicago, was not interested in finance at all. My story of falling into finance happened over a breakfast discussion my freshman year, when there was this prestigious student club at UChicago called the Blue Chips that trade stocks. And I heard 2 of my house members talking about it, saying, oh, I'm totally going to get into this club, like long this, short that. And I thought, oh, fuck, there's this like super prestigious thing. I need to go do that. And that's how this whole thing happened. But I originally went to Chicago as a physics major. And in some ways, I'm actually disappointed that I kind of got pushed down this whole path, but excited to have learned from it and jump back into what I'm more interested in. But I would definitely say that it is a result of my UChicago upbringing. Certainly for the most part, I think it's a very special place in that regard. Um, but yeah, it's definitely that curriculum for sure.
That makes sense. Is that when you started investing or caring about the stock market?
So I mean, I had a number of jobs and summer jobs and such before I went to university and saved money and invested, but certainly I had, not was not paying really any mind to the fundamentals. I'd say my worst investment I've ever made was actually when I just started. I put like 25-30% of my savings into Volkswagen right before they had their emission scandal. And then the emission scandal came out 2 weeks later, and I was like, oh, damn it. But that was really my start to it all. But I didn't really have, I'd say, a methodical way of approaching investing before I went to Chicago.
Gotcha. So that was your stock market tuition that you paid.
Yes. Yeah.
So I guess, yeah, the reason why I ask is because I'm always curious what got people interested in investing and started in investing, because I always look back to why do I think the way that I think? And it
Yep.
always comes back to how did I get started? What influenced me to get started? And I think back to when I first started investing, I was probably like 10, 11 years old. And my dad comes up to me and says, hey, baby Buffett, what company do you like? And I'm like, I don't know. I'm like 10 years old. Like, what do you want me to do? And I'm like, I don't know. I drink Coca-Cola. And my dad was like, okay, like what else? And he's like, what company do you want to be the owner of? I'm like, well, I don't know. I play Xbox with my friends. And he's like, okay, perfect. Coca-Cola and Microsoft. There it is. And he takes me down. It was Scott's Trade at the time, before it became TD Ameritrade. And we drive down to the physical location, and he writes a check for like, I think it was like $1,200. And he's like, we're going to make an account for this little kid, and we're going to buy Microsoft and Coca-Cola. I'm like, I don't know what any of this means. Okay, that's fine. And we come home. I am now the proud owner of Microsoft and Coca-Cola. Now, if you tell a 10-year-old, hey, you own Microsoft and Coca-Cola, they're going to think that they're the king of the world. I went to all of my friends and I'm like, hey, you're playing Xbox? I own Xbox. I'm like, are you drinking Coca-Cola? Thanks for your purchase. We're going to restaurants and I'm thanking everybody for ordering Coca-Cola. And I'm thinking I'm the CEO and I'm the richest guy in the world now because I own these companies. And that's how I got started. My dad asked me, what do you like? What do you use? And I just, at 10 years old, I looked around. I'm like, oh, I play Xbox and I drink Coca-Cola. And I guess that's what really influenced my whole philosophy on the stock market, is investing in things that you know, love, understand, and use, is that reason that my dad asked me that same question. And I'm always super, super interested in when I see TikToks or I see other YouTube videos of people doing technical analysis and they're trying to buy stocks at the perfect time and they're trying to do this or trying to do that. A 10-year-old me bought Microsoft at $17 a share. Now, what is it now? It's like over 250 or something like that. Like that's crazy. And all I did was look around me. I play Xbox. I knew what Microsoft was, and I held it for a very long time. And that's my formula, is what do you like plus time equals you're up. Now that doesn't always happen. Like you could invest in Volkswagen and it could have very bad news and then just keep declining down. And I guess that's where some of the fundamentals can come in, where you can take a look at it and say, hey, this just doesn't make sense. You shouldn't do this. You shouldn't do that. I'll wait on it. And then you might run into an opportunity on the next quarterly results and earnings, and you can take a look at some fresh numbers and make a decision from there. You make more educated decisions than I do. I make decisions based off of just observation. And I think that's super interesting. And it's a super interesting parallel to have this conversation, because it's two completely different philosophies, but it kind of both goes hand in hand. And it kind of makes sense, because Are you looking at random stocks, or what stocks do you look at?
So I'm this is actually something I'm building at the moment. So there's a reference stock data provider called Alpha Vantage, and so this is just like something where I can ask it a question like, "Hey, tell me Amazon's 2019 revenues," and I'm building effectively the process of building a discounted cash flow model just in code. And I'm then running that through every publicly traded equity out there and having it spit back to me those companies in the subset that are currently valued, in my perspective, more than their current share price. And so from that, that's just a way to like quickly filter out a bunch of companies, find the ones that would be potentially attractive, and then probably in many ways evaluate them the way that you do. So that's the way and that's what I'm currently building. That's not done yet. It's been definitely a bit of a process. But outside of that, some of my favorite businesses have been Eagle Pharmaceuticals. And my background, so I did a short stint at JP Morgan while I was at UChicago in their healthcare investment banking team, and was really excited about healthcare, and then ultimately went and pivoted into software. But I look for business models that are attractive and from a risk-weighted perspective make a lot of sense. And so what Eagle Pharmaceuticals does, to give an example, is their typical pharmaceuticals business. But instead of creating these brand new blockbuster drugs, what they do is they take existing drugs and they just make them injectable into liquid. So they take powdered forms that are more difficult to administer and they turn it into a liquid that can be injected into the human body. Oops, sorry. Exit out of Zoom here for a second. And by doing so, there's a specialized FDA process to get that approved, where you get exclusivity on your drug for 3 years, and you're not spending a ton of research and development money making a new drug. You're just spending a bit of money on a chemistry team that can take existing drugs and turn them into liquids. And that's a really kind of diamond in the rough business model, because you get exposed to the really powerful revenues that you can see in pharmaceuticals without the risk of potentially dumping billions of dollars into a wonder drug that ultimately might flop or not get approved. And so finding business models like that is really fun and attractive to me. I think on the other hand, there's also, this was a business that was brought to my attention by a prior colleague, Five Below. They're like the premium dollar store, with the concept that everything in the store is sold at $5 or less. And their customer group is generally your 20-year-olds and their parents. And there's a bunch of different verticals like sporting items and lounging items and home decor. But the cost to set up one Five Below department store is about $300,000. And they receive in cash flow from one store $300,000 in about 7 to 8 months after opening the store. So they're cash flow positive within the first year of setting up a location. They have about 800 to 1,000 locations in the US, and typically you saturate the US market from a retail perspective once you hit about 3,000 locations. So there's well over twice of their market left over to keep producing these really high cash flow yielding stores. And that's another just really attractive business model that just on the very basic fundamentals makes a ton of sense. And yeah, so those are two examples of things that I've found very attractive as I'm going through their filings.
Awesome. In terms of your just portfolio, I guess, do you dollar cost average every month? Do you save up a chunk of money and buy at once? Do you find these companies and then say, I like this if X, Y, and Z, and then you execute the order? How long do you hold for? Just what's your investment strategy? What are you doing?
Yep. So I generally stick to, so I find a business that I like from a business model perspective, whip together a quick discounted cash flow model. And if I decide that this is a good entry point, then I buy. And I continue buying until it reaches the point at which I've decided it's now fair value. And so big dollar cost averaging guy, right? So if next month I'm going down even below even below what I purchased it for initially, I'm going to buy more. I'm going to continue buying more until either case one, I hit the original target that I had set for it, or case two, by the time I hit the target, things have changed such that I need to revise my target. So I generally, once I buy something, I set an alert for which point I should now think about selling. But until that point comes, if there has not been a significant development that makes me revise that, I will continue to hold on and dollar cost average, definitely.
Awesome. Love it. Do you ever buy and then have the intention of never selling?
Yes, definitely. So there have been a number of businesses, including Amazon, that I wouldn't have an intention of selling. I mean, there would be cases where I would, like if we had a GameStop situation with Amazon, I'd sell definitely. There are business models out there that I just think play such a crucial role in how we live that they'll be around for a very, very long time.
Yeah. Do you have any dividend stocks that you're just holding just for the dividends? What are your thoughts on that?
Not as much. I think, especially in this environment, and this was a big thing with Disney too. So Loeb essentially did an investment into Disney with the condition that they would stop paying the recurring dividend and reinvest it into their streaming service. And that's something that actually got me to buy more Disney because I found that very attractive. I think in the COVID environment, there's so much opportunity to reinvest. And so if a business is paying a significant dividend, I'd prefer to see that business reinvested into some project that were COVID, respectful of the changes that we're going through. So generally, no. I'd prefer to like hold a bond portfolio if I'm looking for steady income. So on the dividend side, would usually, and not always the case, but would usually prefer that it's being reinvested in something for the business.
Yeah, no, that makes total sense. That's very Warren Buffett of you. He says the same thing about Berkshire, where when people ask why don't you pay a dividend, he says, "Why do you want me to pay a dividend? Let me just collect all the cash and then reinvest it and make you some more money." So that's his philosophy on that. But he does stress the importance of investing in companies that do pay a dividend, or at least diversifying enough to have that dividend reinvestment happening and utilizing just the compounding interest effect. And I personally think it's important to at least have a little bit, especially because we're younger. We do have time on our side, so we can be a little bit riskier. We can invest in some growth stocks and at least dabble in dividends to collect that compounding interest, because you can't discount the crazy effects of dividend reinvestment. It just adds up a lot. So you brought up Disney, and Disney's a really good example of this, but how do you think COVID has affected the future of companies and specifically the numbers that you look at?
Mm-hmm. Yeah, I mean, I think, Disney doubling down into streaming services is a very obvious play. I think, certainly other parts of that business got hit pretty hard, but hopefully they come back as well. I think the number one thing that businesses will have to adapt to is human capital over the next 5 years. I think as a result of work from home, there's going to be a lot of industries that are going to prefer to continue working from home or some hybrid model, and being able to efficiently establish your business as one that is hospitable to having people work from home is very important. And so I think for me, when it comes to how businesses are investing in new things, I think making the work from home environment, or the ability to have your workforce continue to work from home, is pretty important. I think this is like the next 6 to 8 months are really a set of time where a lot of things get answered, right? How significant are the changes that we've seen over the last year and a half? Are they going to stick around, or are they not going to stick around? And I think that'll really impact what we'll see in businesses as that happens.
Yeah, definitely. What specifically do you look for when you're looking at these earnings that are coming out? Are you looking more towards guidance, or are you looking more back at past results in terms of evaluating and trying to see, hey, is this a good pickup, taking COVID into consideration as well?
Yep. So I don't spend a lot of time looking at consensus guidance. The modeling exercise is a question of, what do I need to believe about this business to justify buying it? And that for me is really the whole point of the valuation exercise. So you take a set of historical statements and then you craft assumptions about how you think things will look in the future. And if you can get yourself comfortable with that perspective, then invest. And so then the big question is, okay, right, like with any valuation exercise, garbage in, garbage out. You make bad assumptions, you'll get bad results. And so I'd say then the way to answer that question would be, okay, where do I make my assumptions from? And generally that happens from a couple places. So one, looking at the rest of the industry. So are businesses that are very similar to this, what multiple of revenue are they trading on? And applying those similar multiples to your business. That's just essentially what's called trading comparables. And so that's a very bread and butter thing to do. And piece two would be looking at similar business models and trying to look at the historical growth rates that you've seen in those business models and industries and apply them to your business. I'd say probably the best piece of technical advice that I've ever read is that growth is consistently more mean reverting than return on invested capital. And so what that means is you have, say we're looking at, what's a good example industry? Say we're looking just generally at software as a whole, and we have the whole distribution of the growth rates of software over the last 5 years. The businesses that are in the top 20% growers this year are far more likely to be average growers 10 years from now than the businesses who have very strong business models and therefore high return on invested capital are likely to be average return on invested capital producers 5 years from now. And so what that means is that when you're evaluating businesses from a technical perspective, return on invested capital is a much better item to be strong in because it's much less likely that that business is going to be an average return on invested capital business 5 years from now than a business that's growing a ton now. Just by nature of the business cycle, we grow a lot as it's a new product that we're expanding into new markets. At some point that gets saturated. And then unless we can find projects that are equally attractive to reinvest into, then we're kind of stuck at this point where we're now growing at average or perhaps even below average of the rest of the industry. But so long as you can prove that you have a very capital light but high producing business model, that's something that's likely to stick around and be competitive. So that's a really my favorite book on valuation, which is called Valuation, spends chapters and chapters on this. It's written by a bunch of McKinsey PMs, and they got very academic about looking at businesses and their historical growth rates versus businesses and their historical return on invested capital. And this finding that growth is more mean reverting than return on invested capital is probably like the number one fact that I've loved in valuation.
Oh, I love that. Great explanation, by the way. Makes a lot of sense. What are your thoughts on options trading?
So I actually don't do a bunch of options trading. But I mean, options trading on margin is certainly a very dangerous game and one to get you a lot of exposure, but certainly a very dangerous game. I think, I don't dabble a ton. I suppose I don't really have a core set of thoughts here, but certainly, I mean, interesting if you have a thesis and want to protect on downside and you think that there's something that's very interesting that you want to play. But I certainly don't trade options much.
Yeah, no, I was super curious what someone who's very focused on the fundamentals of things would think of options trading, because options trading can get so crazy so fast, and sometimes it has nothing to do with the fundamentals of anything. It's just price action, and being able to capitalize on that price action or that velocity of price change with a deadline attached to it. So it's a deadly game if you treat it as such. And I've probably been trading options for about a year or two now. And just to give you some background, this isn't what I do full time. I'm not a stock investor. I don't day trade. I don't focus on stocks all day long. I have a typical 9 to 5. I have a company that I own that I have clients on retainer, and I work with them every single month. So I have that. I have multiple other sources of income, and everything is just operating right now. And stocks is probably my biggest passion, is the thing that I'm most interested in. And financial literacy stuff, that's where the TikTok came in, and now this YouTube. But options trading is just a lot of fun. So if I ever see an opportunity, I'll take it. And it's very important, like you said, not trading options on margin. I mean, you could if you're smart enough, if you're careful enough, if you're responsible enough, but it's just human nature. If you have $50,000 credit line, you're gonna try to utilize that as much as possible, but that'll just double and triple your exposure, and it could get deadly very fast. But yeah, I was just curious what your thoughts were. I like asking people this question because I hear so many different answers, and this will actually lead to my next question. But if you ask a technical analysis guy, what do you think of options? They're just going to go and explain 50 different patterns to you, and how this means this equals that. And I'll guarantee you it doesn't. But that leads me to my next question, which might be a little leading question, but what are your thoughts on technical analysis?
Yeah, thank you for the softball. Yeah, absolutely not. I mean, this is, I think similarly to you, what got me into TikTok in the first place, right? I think the majority of what I think makes TikTok so toxic is technical analysis. It is this concept that there are 10 secrets to stock charts, and if you learn them all, you will be able to guess the movements of share price in the future. And it's absurd, but and this kind of also what you mentioned in the beginning. If you're scrolling through TikTok and you find these toxic TikTok videos and you're engaging with them, it's going to show you more and more. And that's the danger of toxic information on TikTok. And like if you're completely amateur to the world of investing and you see this first technical analysis video and you find it interesting, like I can only imagine the rabbit hole that you go down. And so I mean, I have spent zero time in the technical trading world outside of reading a candlestick chart when I was 14 or 15. But yeah, so I'd say a very short, unequivocal no. What I do, so there's one caveat to that, and I wouldn't quite call this technical analysis, but with the Medallion Fund, what's his name? Jim Simons, and what he did right so Jim Simons, big mathematician, was solving effectively Enigma machine problems, analogous in the Cold War, and he hired a bunch of computer scientists to essentially just look for correlations in the stock market. Right, gold went up on Friday. What did that potentially imply about oil on Monday? And to find correlations that had just even the slightest backbone of truth to them potentially. And if you're funneling billions of dollars through this machine and it's getting it right 52% of the time, you're making a lot of money. And if you're the only one in the game doing it, you're making a lot of money. And that's kind of the only place where I could find this world of investing interesting. But again, that's not really looking at a stock chart and predicting its movements based on the chart. But that's kind of the one caveat I would toss into the ring there. But yeah, I completely agree with everything you've said so far.
Yeah, we're on the same page on that.
Yeah.
I want to interview someone who's a big technical analysis guy.
Yes.
I just want to see if he can change my mind, but I don't know about that. So on that note, though, if you open up a ticker and you look at it, do you ever look at the chart?
I mean, I'd say on a 5-year basis, I look for reactions to earnings or new management, just to get an understanding of sentiment. But I'm certainly not looking at intraday, 5-day, month stock charts ever. But yeah, I'd say stock chart only for understanding why certain things have moved significantly over the last 5 years, and if that's important for thinking about the business in the future.
Yeah, you'll think I'm crazy, but when we're doing options trading, I'm looking at 1-minute charts on the daily and just seeing every single penny that moves. You're like, oh, is it going to happen? Is it going to go up? Is it going to go down? And it's crazy. And I can see why technical analysis people will conclude decisions based off of patterns. And I actually have a video on this. I think I'll probably just put it up, but it's what's it called? Apophenia. It's the term means seeing patterns where they don't exist. For example, if you see shapes in clouds, it doesn't mean that that cloud is shaped that way. You're just seeing patterns. You're seeing things that you want to see, and you can draw conclusions. And it's very much like how you can twist statistics to say whatever you want to say. And if the chart looks like a shoulder and then it's about to turn into a head, that doesn't mean it's going to turn into another shoulder. Every time I see a Head and Shoulders TikTok, I duet it with fun facts about Head and Shoulders dandruff shampoo. And people love that. But I don't know. I guess it could work for some people. People argue they can make educated decisions because charts represent different emotional patterns. I don't know. I can't even play devil's advocate here. We're too much on the same page, so we're just both going to agree on that, and I'll move on. Tell me about Nested.
Yeah, definitely. Nested is a real estate tech platform that was designed to fit the way young people look for apartments. And we're effectively a no broker apartment search model that makes it very easy for existing residents of apartment buildings to invite their friends into their building and receive referral fees for doing so. So effectively, we're just allowing anybody that is a apartment resident to take on the role of real estate broker, for lack of a better term, but to help their friends move into new cities or apartments wherever they're moving. So we're growing first in off-campus student housing because those are just like very networked areas. Everybody knows each other. Generally, a lot of those apartments get pushed around via pass down. But the goal is to have this model work also in cities like New York, Chicago, San Francisco. And the second big piece of what we do is we have a matching algorithm for apartment searchers and buildings. So if you share a phone contact, Facebook friend, common university as residents in the building, that building gets a high relevancy score for you and will be shown first in a list of properties if you're looking to move to a new city. Kind of the big thesis here being, again, work from home will make more important not just where you live and what the amenities are, but also with whom you're living and having easy access to finding your friends to live with. So that's what we've built. And we're in the process of now marketing it, which has definitely been its own challenge. But yeah, that's Nested. Very excited about it. It's a co-founding team of 4, 3 kick-ass software engineers and me, which is like maybe 20% of an engineer. Yeah.
Awesome. Do you have any questions about marketing?
Tons. Yeah. So if in establishing a marketplace, I mean, how would you think about marketing? One in which you have to balance reaching out to both users, so residents and apartment searchers, as well as your customers, property managers.
Yeah. So every time I want to tackle a new product or service, I always think about who is this for? And then you have to kind of take that persona. You have to identify as that person. And what do they do when they wake up? Where do they go? What do they eat? What do they drink? What do they think? What do they look at? What do they consume? What are they thinking about? Like, what are they going to do next? Where are they going to be? These are all just the questions that I ask myself, and I create a mascot. And I create the person A does X, Y, and Z. And then I might move up on the age range and I'll say person B does A, B, and C. And I just create a whole list of what are all of these people doing. And I kind of role play with myself in my head. I'll write it down on a notepad, clean it up later. But I want to truly understand, who am I selling to? Who do I want on my app? And then once you identify what all of these people are doing, then you can actually make educated decisions on where you need to hit them and show your product. Because you could have the world's most amazing product or service, but if nobody knows about it, what's the point? You have nothing. So that's where marketing comes in. And when you wake up in the morning, do you check Instagram? Do you go on TikTok? Do you check your email? Do you check your texts? Where are you going? And that's where you need to be. What time are they looking at things? What content are they consuming? And then you need to create content to capture their attention. So content creation is huge. I mean, there's so many different ways you could go about that, whether it's written, whether it's video, whether it's audio, whether it's social media posts, images. You just need to be out there and providing a value first that'll draw people in, and then you can redirect them to wherever you want. So my TikTok is a prime example of marketing, where I started to create value first. I'm just posting videos about whatever I think is valuable for my target audience. And those people are scrolling, and I got them to stop scrolling somehow. There's something visually attractive about it. There's a hook, there's something interesting, and they'll stop. And then they'll keep watching. And once they keep watching, I forgot what it's called. It's the promise, process, and payoff, PPP. And you promise something, you show the process, and then it pays off at the end. And that's really the core of marketing, whether it's social media ads or videos or written content. You promise something which tackles their current problem. Hey, are you looking for a new apartment? Well, yeah. Check out this new app. We do X, Y, and Z, and now you can get a new apartment. I mean, that's a super simplified way of making an ad, but that's the process, the PPP. And I don't know, it just really depends on your target audience. If you're looking for college kids, you need to be all over colleges.
Yep.
You need to be all over social medias that they consume content on. And whether it's drawing them in with that hook of, do you need an apartment? Do you wish apartment finding was easier? Do you want relevant places to live? Do you want X, Y, and Z? All of your use cases, whether that's your hook or you hook them in a completely different way by just anything, really, like a meme, like making fun of apartments and saying like, you don't want to live here. You know what I mean? There's so many different ways that you could go about it, but it really just comes down to your target audience and who you want on the app, making content for them.
What is your favorite both video and photo editing suite?
Like software?
Yes.
So for photo, I mean, the Adobe Creative Cloud, everything Adobe, Premiere, Photoshop, After Effects, all of those for video and photo content. I mean, that's probably pretty much it.
Yep.
If I need to schedule posts, I'll probably use Hootsuite. That's a great way to manage a bunch of different, social media platforms. But yeah, no, I'm pretty much just an Adobe guy.
Yep. And are you out in the Bay Area?
No, I'm in Los Angeles, actually, downtown.
Got it. Awesome. Have you been in California for a while?
I was born and raised here. Yeah.
Nice. I am super jealous. I spent a little bit of time in California, in San Francisco, and then even less time in Los Angeles, but really loved LA. Have you like lived in California the entirety of your time?
Yeah. I was just born and raised here. Haven't moved. I wasn't actually born or raised in LA though. I was more of an Orange County guy, and just 2 years ago now, decided to move up to LA with my wife, and we're loving it so far. We wanted to enjoy the city life, but right when we moved here, COVID happened about 2 weeks after we moved. So imagine moving into a big city and you're about to, experience the city life a little bit, but then there is no more city.
Yeah.
So that's the position that we got put in. We're both fortunate enough to be able to work from home, and so we just hunkered down and experienced what we could experience. But yeah, loving it so far.
Yep. Yeah. I spent a little bit of time in Manhattan Beach, and loved it. Incredible.
Awesome. Yeah. The last thing we have on our list is being nomadic, spreading good vibes.
Yep.
This is a topic that you wanted to talk about.
Yes.
What do you want to talk about?
Yes. So I'd say perhaps a bit different from your experience. I've kind of moved around a ton in the last 8-7 years. and have really enjoyed it. I think probably so right after I graduated college, I spent 3 months or 3.5 traveling in Australia and bartending my way through hostels, and probably some of the best time of my life, and really kind of made me reconsider the track that I was on broadly. I felt like I felt like I knew that I was on this hedonic treadmill for a while, and I really needed an experience off of it just to be like, okay, like I know I'm on it, but it's pretty stupid to continue being on it. And a big part of my decision to ultimately leave finance was because of that time. And I've generally, I think in these next couple of years, really want to prioritize spending 3-4 months in different places, especially if that means kind of even living in the same room as 5 or 6 other people that are constantly switching out. That's just been super exciting to me. I don't know what would you do that at this stage? Kind of go and live in a hostel somewhere for 4 or 5 months?
That's so cool, but no.
Yep.
What what I want to do and what me and my wife do is we love to travel. So like in on Sunday, I'm going to Tulum with my wife, and we're going for about like 10 days.
Yes.
And for me, that's good enough. I don't know if I could. That's way outside of my comfort zone, and I'm okay with going out of my comfort zone to do things. But that's like a lifestyle. Like I have 2 cats. What am I gonna do with them? Like so it's being that level of nomadic is really interesting for me to watch. So let me know how it goes.
Yep.
But that's not something for me. What my wife and I like to do is to travel to different places and experience those cultures and take the best we can out of those cultures and come back home and apply them to our daily lives.
Yep.
And I proposed to my wife in Rome. We got married in South Africa, and like that's just one example of we like to bounce around and take the best. Like I got really good experience in Rome, saw history, like you get to see the history in just the ground that you walk on. Everything is historical. Like it's amazing. It's amazing there. And I don't even want to talk about the food. It's crazy good. And then you go to South Africa and it's completely different. It's its own different type of history, and it's the dirt underneath your ground in the national parks. That in itself is historic. And you see these animals walking around. I have a picture with a lion that's sitting 2 feet away from my wife and I, and that is a real lion. Like that is not a zoo. That is a actual thing that'll murder you. So like that in itself is its own culture. You see elephants walking around and giraffes like hitting each. Like I saw a giraffe fight. That was the coolest thing I've ever seen. There's 2 giraffes standing right next to each other and just whipping their necks at each other. Like, yeah. So like these are all the things that I like to soak up, and all the people there were just so friendly and so nice. And I couldn't do that for like 2-3 months though.
Mm-hmm.
And I admire people who have the flexibility, who can, and just the balls to be able to do that. I think that's really cool.
I actually spent 3 months or roughly 3 months living in Playa del Carmen from like December through February, which is right on your way to Tulum. So I'm guessing you're flying into Cancun.
Yeah.
And if it's your first time going through Playa del Carmen, which you will naturally have to, definitely stop by a spot called Birria Tacos. If you haven't had Birria Tacos before, they are absolutely nuts. Yes.
Hold on. How do you spell that?
So it's Birria. This is a style of taco, but also a taco shack named this way. I think it's on like 30th Avenue and 38th Street in Playa del Carmen. So like you can pretty much, it's right off the highway. So on your way down into Tulum, you can jump right by it. But they soak lamb in a stew overnight and then put these into tacos. And so it's like a specific style of taco that is just absolutely blew my mind. The hands down the best taco I've ever had, no question. I was going here like 4 or 5 times a week, and really incredible place. So like I will be living again through you if you guys go check that out. That'd be very exciting.
I will definitely try to check that out. It sounds delicious.
Yeah.
Yeah. No, but we're flying into Cancun, and then we're
Yep.
going down to probably like 5 different hotels
Mhm.
down in Tulum. So we just
Yep.
want to experience a bunch of different hotels and resorts and just kind of see the differences and stuff. This will be our second time going down there, but
Yep.
the first time we went down, we stayed at the same resort the whole time.
Mhm.
And I don't know if we really got to experience what we wanted to experience. We kind of um, felt like our resort was a home base and we just got stuck there.
Yep.
So this time around, we want to bounce around and really experience the culture down there. But
Yep.
I got to experience some tacos first.
Yeah. But yeah, they're great at that with those resorts. They can
Yeah.
definitely lock you in. There's a lot of
Yeah.
fun stuff to do. Yeah.
Yeah, definitely. Well, all right, man. That's all I got. If you have any questions or anything, now's the time. If you want anyone to go anywhere, check anything out. I know you have a Discord. You got a YouTube, to make sure everyone goes subscribe to his YouTube. I'll probably put a little thing right here. And then what else? What else you got for us, man?
Yeah, no, this was super fantastic. I am so excited to be the first one on this series because I'm sure it's going to do super, super well. I'm definitely going to be hitting you up generally outside of this as well to learn about your editing tricks because I think you produce just not only tons of volume but incredibly well crafted content, which is definitely just the mix that you need to really blow up. Yeah, this has been really fantastic. Thank you so much, and looking forward to seeing this go up. Yeah.
Of course. Thanks, man.
All
Appreciate
right.
it.
Bye.
All right.
Have a
Have a
great
good one.
weekend and a fun trip.
You too. Bye.